I wanted to pick up on the point that we were chatting about when you were last on ET Now. Your PMS strategy, wherein you have invested exclusively in some of the platform companies. Now, most of these stocks, barring a few like Nykaa, etc., have already doubled from their previous lows, right? Do you think a large part of the rally is behind us, or do you still find these stocks worthy for long-term investments?
Aisha, so we're actually extremely positive about this space. The way we look at it is it's a quasi-private equity strategy that we've launched. Our timing ended up being very good. We launched it pretty much close to the bottom. But if you're effectively just looking at what makes us so confident of long-term value creation in digital platforms, uh, market capitalization growth is always driven by business growth. These are the fastest growing businesses by far. So if you're looking at a kind of digital platform strategy, we have investments in companies like PayTM, Nykaa, Zomato, Policy Bazaar, etc. These are the fastest growing financing companies, fastest growing food delivery, fastest growing shopping spaces. So growth is something which I think is very clearly understood, and there's very clear value migration happening towards this particular part of the segment. We built long-term models, and if you just look at the penetration rates in India, look at certain underlying dynamics in terms of the foundations for longer-term growth, the ability for these companies to continue to compound revenues at over 25% from a longer-term perspective is very clearly there. The misunderstanding, according to us, in terms of the listed market space is with relation to the longer term profitability of these companies. What people don't necessarily understand is the sheer quantum of current expenses that are really just short term in nature. As in, these expenses are primarily linked to the current hyper growth phases that these companies are on. There are four distinct phases of the evolution of a digital platform. When you're in stage 1 and stage 2, you're trying to change consumer behavior, and there are very large amount of expenses to drive this change of behavior. As consumer behavior gets changed and you're starting to see this, you can actually ramp down these costs quite significantly. And someone like a Zomato introducing delivery fees, if you're seeing someone like PayTM earlier used to have cashbacks, there you no longer get those. A lot of the costs that were involved in trying to ensure that consumers participate on a platform, those can be rolled down quite significantly. And also various monetization levers can be, there are various new forms of monetization that come up. Now, this can lead to very healthy profitability over the longer term. And according to us, a combination of much above industry growth along with a shift towards profitability should lead to very attractive value creation.
Right. Sure.